Hello and welcome to another lesson. I hope you are well. So, we're going to start kicking up a little bit, and I want to talk to you today about something called imbalances because this is another vital piece of the puzzle that we all have to understand when it comes to trading. And you will also be able to understand the next point in which I was talking to about at the start of the program, which is the market is generally looking to seek towards two things. One of them being liquidity, which we've covered, the other one now being areas of inefficient price action. We use this for entries, we use this for targets, we use this for confirmation and confluence and all that good stuff. Now, what is imbalance? Well, imagine firstly, we've got this profile happening right now where price is moving lower and then suddenly reacting to the upside. That is just price action candles printing in normal format. What you can see are these wicks. Now, these wicks have a purpose as well as these bodies. Each wick is responsible for rebalancing price action. So you can see here, for example, in this thing that I've drawn, price action has swept this area of liquidity here and then aggressively moved to the upside, engulfing this particular candle here, now claiming that to be a valid order block, which we did in the last program, in the last lesson. As you can see, this particular wick here, when this candle closed and engulfed this area here, you can see that not only have we got a valid order block for us to take an entry within, this is a change in state of delivery because there was a series of down candles. Now, price has moved aggressively to the upside, engulfing this entire candle. That's now an order block. So you could take an entry based on the last challenge off the open of this particular candle, and your stop loss would be just below here. Now, what you see is in this example here, this wick never made it any lower. It never came to the opening of this area and then moved to the upside. What it actually did is it rebalanced to the top of this wick right here. When you see that happening, you are getting something called a rebalancing in price. That is the markets and price doing exactly what it should be doing. So price action closes here, very, very bullish. It opens, price action comes all the way down, hits this wick right here, and then continues in its upward direction. So maybe you missed this opportunity here, but the important thing to understand is that there are no areas of inefficient price action because this wick has come all the way down and rebalanced against this area here. Now, if we saw something like this happen, where the wick came as low down as here, and then price action continued moving higher, and price action happens to leave behind this gap in price, this is an imbalance in price action because now there is inefficient activity going on, and price action essentially at some point has to come back to fill this particular area before moving in its intended direction. Or if it wants to, it can come back down and it can violate this area if it wants to. If it wants to even reverse lower, it's absolutely fine to do that. But the main thing is that price action would be rebalancing into this area because there are areas of inefficiency involved in here. And the market is looking to do two things. So the market often comes back to rebalance into these areas and then push in its intended direction to the upside towards levels of liquidity, which you can see price action targeting right here. So you can see this all over the market. And if you look on this exact chart here, which is this the DXY from a weekly perspective, you can see this downward movement right here. And we actually created this huge piece of imbalance right here because you can see that wick there all the way down to this wick here. Price action come all the way in and then aggressively moved to the downside. Now that is inefficient to buyers because this was only sellers in the market. So price had to buy back up here. We can see here price action's very, very bullish up into here, and then it's now efficient. to because the buyers have rebalanced price action. Now it's happy for us to take it a little bit lower. Something else you have to understand when it comes to areas of imbalance is price action only has to fill 50% if it wants to. So if you get your Fibonacci tool right here and you measure the imbalance, you can see that this 50% line right here, that area there states that 50% does not, it does not, if it doesn't want to, have to come any lower than 50%. So basically, if you come into this area here, you're looking for an opportunity, you see price taps 50% right here, and then you see price start moving higher, you can look for a trade position in this particular area. If price action does not reach 50% of that imbalance and then starts moving higher, that's going to make price lower in probability because it's a likelihood that price action's just going to come lower and take you out and fill in this area. Or even if price action came into this area right here, there is obviously a chance price action could come lower just to target this area here. Of course, the most ideal situation is always that price action would fill all of the imbalance. But when you see a larger area of imbalance, just understand it doesn't have to do all of it. It can come to fill 50% of it. That is required a good enough area, because if you zoom into this imbalance here, you can see that price action was aggressive in this imbalance creation. Price action came back up to here, never tapped 50%, as you can see. If we measure this area of imbalance, it didn't come anywhere close to it. It gave us a strong reaction from that area. So yes, you could have potentially looked for areas of imbalance, areas of entry, sorry, to target these areas of liquidity. But price action came back in the end to over 50%, almost filled the whole thing. But the main thing you have to understand here is just when looking at it, price action, this is the 50% line. Price action now has gone above 50%. It hasn't filled all of it, but that is valid enough for us to start looking for positions lower. Now, you can go on to any random chart that you wish, and you should be able to see any random chart, any random time frame. You can basically have a look at areas of inefficient price action, and you can see that you are going to get very, very strong reactions from these areas. Now, this for us is going to be another area of confluence when it comes to our trading. We are going to be able to use these areas of imbalance to find setups, to find targets, to try and understand if there's been a change in state of delivery, to try and understand what makes a higher probable area of imbalance compared to a lower probable area of imbalance. But you can see here, price action spends a lot of time inside this imbalance, consolidates really, even before dropping and then coming back only to just carry on in its intended direction lower. Because if you see a very, very aggressive move lower, that is price intending to go lower. It's not random when you see this stuff happen. This is really, really not random. And you could honestly go on for days. Now, when it comes to imbalances and gaps like this, we're going to talk about this a little bit later down the line. We don't need to worry about them right now. The ones I want you to focus on is just these areas of imbalance here. You can see in this example, price action has filled this imbalance, but not this one here. That's okay. And that's, again, we're going to talk about that later. You can look in either of these areas of imbalance. And again, we can go all day and we can just look for these areas and we can observe price action, respecting them. You can see sometimes price action does disrespect them, but price action here is pretty bullish. So that's obviously something we have to bear in mind. You can see this huge wick here came in just to fill in this area of imbalance. It's honestly one of the most powerful things you can do. And you can see here price action violated this area of imbalance. When you see that happening, you're going to understand that this is the first indication of price action beginning a downward trend instead of an upward trend. Because price action is, as you can see in these areas here, respecting these areas of imbalance. You can see one here as well. But after a while, price action is extremely extended to the upside. And these trends in price action do not happen forever. So when you see price action is now violated that area, it's created another area of inefficiency. Price actions come all the way back, rebalanced it, and began a new trend for us to come lower at this particular point. And then once again, you can see if price action is in a bearish state right here, you can see that price action is filling out these particular areas. This is one of the most powerful concepts in terms of understanding what the reason behind price movement. Imbalances is one of the most powerful things. I love utilizing these for entries. I love utilizing these for exits. I love utilizing these for confirmations, for absolutely everything. So, in terms of what you need to really do from here, we're not going to set out the homework task just yet because the next one is the 20 block trade challenge isn't quite ready for you. You need the next couple of lessons to entice that in. We're going to try and take this a level higher, but just do a little bit of your own homework and just go onto a chart. I've gone all the way back on this lesson here to June on a 4-hour chart, June 2024, and I'm just marking out all of the relevant areas of inefficient price action just to observe and see and prove to myself that the market is doing just two things. The first thing is it is rebalancing into areas of inefficient price action, as you can see right here. The second, that it is targeting areas of liquidity, as you can see here. This is the premise for price action. When price action has swept a higher time frame level of liquidity, it creates another area of inefficiency, as you see right here, and then it aggressively comes lower to target more areas of inefficient price of liquidity as well, creating more areas of inefficiency, more areas of liquidity. And you can see that this is all price is looking to do. I do not care what these gurus have to say in terms of, oh, the markets are doing this in terms of the orders that are in here, and not understanding Wall Street, not understanding the real movement behind the banks and things like that. I don't give a toss, to be frank. I just like to see the simplicity of the market. The market is sweeping liquidity, creating imbalances, sweeping more liquidity, creating more imbalances, sweeping more liquidity, creating more imbalances, sweeping liquidity. When it's done with that, you can see that price action is pushing to the upside to take all of this resting liquidity trend line right here, and it's also looking to take this higher time frame level of liquidity. It is doing that via rebalancing into areas of inefficient price action along its way. Once it has done that, price action creates more areas of inefficiency to target more areas of liquidity. Now, this is just how I understand the markets. This is what works for me. I've always been someone that wants to keep things super, super simple. And if I can just understand the simplicity behind these things and just find a nice model which allows me to make nice, consistent profits where I can give everything I need to give to my family based on the market, just doing these two things, I would say I have succeeded in life. And I think if you can grasp the exact same thing that we're drawing out here, I'm gonna go back as far as I need to go back to prove this to you guys. You'll be able to see just how powerful this is. And I want you to go and see this for yourself. And this is where you can start being excited and where you have to understand market structure and things like that. But we're going to talk about all this stuff. But I just wanted to introduce you to imbalances. If you haven't been introduced to them already, I want you to understand the true power behind these areas of inefficiency and behind the fact that price wants to target liquidity. And then I want you to get excited because it's only going to get stronger for us from here. With that, I will speak to you guys on the next lesson.